Okay, folks, thank you very much for being here. We have it's a regular feature, and I would like to have at least twice a month as uh, the number of customers, the number of interested friends and colleagues who are interested in this system is increasing. So I've been receiving a lot of inquiry as well, and to keep the people engaged, I think this is a good I think practice to have a session maybe every other weekend, maybe once, at least once in a month, but I would like to have it at least 2 times in a month. And I don't want any AI agent to join us. Sometimes some people have AI agents and we don't know who is at the other end. Anyway, we have 11 people and we are good to go. So I've been presenting my new system, which is web-based and AI-powered analyze stocks. And probably many of you have seen it or used it as a beta tester or as customers as well. Now, what? So before that, let me just get through this disclaimer. The material presented here is for education learning purposes only and should not be taken as purchase or sell recommendations. Trading and investing in stocks and derivatives, futures, options. I think I should add crypto as well here. Crypto is probably the riskiest item around. Is risky and could result in a substantial loss of invested capital. I'm not a registered financial advisor with FINRA or SEC, and for any advice, especially pertaining to your own personal portfolio and financial management, please consult to a registered financial advisor. I would like to, again, very focused meeting because we have as the system is growing, they have a lot of new features coming. I just like to focus on two things here. We have introduced two new rating systems for our stocks in this universe. One is known as weighted rank rating or WR rating in short. And the other one is known as ER or earnings rank rating. And we will be analyzing 5 stocks using these ratings and other features of our stocks analysis software. So first thing obviously comes to mind, what is the definition of these ratings? So the first thing, the weighted rank rating, it's a proprietary indicator or a score, I would say that measures a stock's price action strength over the past year, giving more weight to the recent price action. So what it means that every stock has its own price action and behavior, and how strongly or how well uh, one particular stock has performed over a period of last 1 year. This is what it measures, and it gives a raw score. So the first item as output is a raw score, and different every stock has a raw score. For example, now, what's the benchmark for that raw score? The details are not here. I did not have the time to put everything here. For example, S&P 500 index SPY, this ETF, has a raw score of something around 12. I will show it to you in a minute. Anything which has a raw score of more than 12, let's say some stock has a raw score of 24, it means that its price action has performed twice as good as S&P 500. Not necessarily just the overall return, but overall price action means that the rate of the increase as well as the gains. And the second component is the percentile range. And what it does, it converts that raw score into a scale of 1 to 100. So higher the percentile range here, it means the better the stock has performed when it comes to its price action. So a range between 80 to 99 means a very strong price action outperforming 80% of the market. A 60 to 79 is above average and very good price action. It means, for example, if Apple has a score of 61, it means that its price action has outperformed 60% of the stocks in the market. Excuse me, which is approximately 5,700 in our universe. The lower you go, it means the price action is getting weaker and weaker and weaker. For example, in between 1 to 19, a weak price action among the worst performers. Okay, so this is about uh, the 1 second. Let me open the chat window. So if someone have any question, I can answer it. View it in the chat window. New messages. It looks like I always struggle with it and technology. Okay, so someone said, Arshad said, I'm human. That's fine. I can see your humor. Sometimes I see the good question as standard ranking or own device ranking. It's my own device ranking. It's not a standard ranking. You won't find it anywhere else. You can find something similar to it. For example, bar chart has something similar to it. I don't know about their formula. It's known as weighted alpha. Now, I don't know how that works. This is my own device ranking. Okay, but you can expect that, for example, if you're subscribed to bar chart, let me show it to you the bar chart. Maybe, yeah. For example, you see they have a weighted alpha range of 106. Now, how do they drive this figure? I don't know, but I have an idea that what they say that it's similar to my weighted rank rating, and although I have a different scale and a different formula, so the higher weighted alpha here, for example, you would expect higher weighted rank in my system as well, because this is their proprietary system. So I'm not aware of how do they calculate and arrive at. Okay. How did you select the 5,700 stock? That's a very good question. It came from the data feed which I have. The data feed supports 5,700 stocks. Plus, on top of that, many other ETF as well. So that's why from where this figure, this data feed Intrinio API, it is coming from there. So going back to our presentation, so that's how the weighted rank is calculated. It's not the formula is not given here, but how is it gives you an idea. Similar to this concept, there's an earnings rank rating. And the earning rank is a percentile ranking from 1 to 99 that measures a company's earning growth. It's not about the price of the stock, it's about the company. It's more on the fundamental side. So a company between, for example, if has a rating of let's say 80 or 90, 80, that means exceptional earning growth, and it is better than 80% of the stocks out there in this universe. The way it is growing its earning and how it's growing its earning, there are other I mean, it's a cumulative growth rate, which is known as CAGR, and is it positive through last 4 quarters? What with what percentage? And so the database has a percentage of every stock is earning growth, and then it ranks the growth of earning growth of a particular stock against all others in the 5,700 stocks. So let's say rather than going to the numbers and we, for example, want to see Apple because Apple is among one of those 5 stocks I wanted to uh, show to you. Before that, one thing. So we have 3 systems here. One is WR, weighted rank, other is earning rank, and I already have a TR, which is trend recognition. So how does it all go in tandem together? So what we should be looking for, we should be looking for a TR buy strong buy signal, which is mostly based on the technical side, near a buy point. But we should also take a look at our WPR percentile. So if a stock has a 70 plus percentile rating on the WR and a high AR of 70 plus earning rating, then it's a strong stock fundamentally. It's growing its earning, performing better than 70% of stocks out there, showing a high relative strength or a good price action better than 70% of stock out there, near a buy point, and it's already in a buy zone or strong signal. So that's probably is the way to go for. Question was, what is the timeline for earning growth? 1, 3, so for 3 years, for last 3 years at least. Showing a bullish uptrend. The data is for 5 years, but the higher weightage and the analysis is done on for last 3 years. So showing a bullish uptrend, strong price action. TR is our proprietary trend recognition indicator. As I will show when go to the system, I will show it to you. It's showing a bullish uptrend. strong price action and backed by strong earning growth. So TR is showing you the strength, trend recognition, bullish uptrend. WR percentile is showing you strong price action, and earning growth is shown by strong it's ER rank. Now, what we are looking for? We are looking for, again, as I said, strong buy TR signal, and we are looking for that around a buy point. So this, if we have an up arrow in the system, it will tell us that it has just started the trend, and the check arrow means it is within the 5% of the buy point. And if it also gives you an asterisk, this means it is showing relative strength and accumulation distribution according to chicken formula, which is the top 5% of their 52-week range, signaling a strong institutional interest. So a combination of these things, although it's getting a bit complex, but we will try to simplify it, gives you some very good stock around a buy point in a strong zone with good higher earning ranking and good weighted rank rating as well. And that's what we should be looking for. So we will be analyzing these 5 stocks and see how all of them one by one, they fall on different lines based on TR indicator. So for those who you don't know about the TR indicator, it's my proprietary system for any stock. And this is the TR system. And what it does, it gives you buy and sell signals. So for example, when you have this triangle, green triangle, so it means the TR system is telling us that a new uptrend is starting. It's still neutral, but it's on the bullish side. If it is a light green zone, it means that it has established, but it is still in initial stages. And the strong green zone means TI stands for trend recognition. So this means the strong trend has started. Now, what we should be looking for, these are the buy points identified with 8% or minimum stop loss identified. So for example, Apple has recently started a strong trend right here. Let's see the right side around to it is still at 278. The buy point was 271. So I alerted my colleagues when Apple was around within 5%, it's still 5%. So this was right here. This was the first stage when it crossed this moving average line and it was close to that. So I said that okay, the TR system for the Apple is sensing a buy signal. And this is the right time to where is the should be the stop loss right here with either its 200-day line or this 249.49. And it's still Apple is showing a strength. Or probably it will test this 285 or maybe it goes beyond. So we know one signal from our TR system. Now let's go back and analyze it and let's see what its weighted rank rating W. So this is Apple. On the right side, you see the TR status was strong buy, green, and the weighted rank rating was 19.4 and 71 position in percentage means the Apple's price action during last 1 year has outperformed 71% of other stocks, better than 71% stocks just based on last year, and giving more weightage to the recent price action, means last 1 quarter and 6 months. And its earning rating is 56. So the way Apple is growing its earning, the rate of growth of earning is better than 56% of the stocks in our universe for last 3 years. So things look good for Apple, in other words. A strong uptrend around a buy point, checkmark tells us, good weighted rank rating, and good earnings rating. So that's normal candle stock chart for Apple. And here are fundamentals. So why the Apple has such a good earnings rating is 3 years EPS, earning per share growth rate is 9.8. In the previous quarter, year to year, it has grown its earning 23%. And last quarter is 5.87%. And it's just not growing its earning, it's also growing its revenue. And the revenue growth year to year basis was 10%. And the financial health is also very good. EPS growth is 25.4% on average for last 3 years. The gross margin is on its product is also very high, 47%. Return on equity is also very high, 152%. So what else we need? We want a good company from fundamental side, showing us strong sales growth, in revenue, strong profitable growth, good margin, around a buy point when it comes to its TR indicator, and when this bullish trend has started. Now, some people might say that you pick up the trend later. Why not at this point? And that's a valid point. It depends upon stocks to stock. If it's already in a good uptrend, then you can take chances at this red point. It is normally a turning point, but it could be a start of a longer downtrend, like this phase, like this phase, like this phase. On the other hand, chances are higher when it's around a buy point and we have this green zone that it is going towards on a high side. But what does Apple compare in the tech sector earnings percentile? Just in the tech sector? Now, that we have to compare it with the tech sector's ER rating, if it has. But unfortunately, the tech sector's ER ETF is XLK, and XLK itself does not have any earning. So we cannot compare Apple with XLK. What we can do, we can compare Apple's performance here with the tech sector. So for example, this is XLK. So Apple in 1 year is at par with tech sector. Tech sector was 25.95% increase. Apple was around 20. But over a period of maybe 5 years, we go to 5 years. So Apple has outperformed the tech sector as far as I know. Let's check it out right here. So Apple over a period of 5 years has given 112%, which is slightly even less than the tech sector, 119, because tech sector has some other companies as well, like NVDA and SanDisk and others. But it's at par. But it's better than overall market, 93%. So that gives you an idea if you want to compare Apple's performance for last 1 year, 3 years, 5 years. So right now, not only this, Apple is growing its quarterly earning every year, every quarter, and it's also growing its revenue every quarter as well. So when it comes to Apple, in other words, Apple is, from our point of view, is in a buy range. And you will find it in our weekly report as well, because it's one of our stock we follow, a long-term stock. And since we are talking about 3 years growth of rate and and the fundamentals, so basically we are looking at the long-term investing. These are not just for the swing trading that we want to keep it for 3 or 5 days. On the other hand, coming out of this buy point can also give us a good swing trade as well. Like within 5 to 10 days or maybe 1 to 2 weeks, we just want to have 5 to 10% return and then quit. That can also be a good indicator for a swing trade as well. Okay. So going back to the list of techs, Apple was one of those. But this week we have Valero Energy, KLIC from tech sector, TSM, Taiwan Semi, and CCL, Carnival Cruise from discretionary sector. Although I do not want to be very much focused on the tech and discretionary at this time, because those overall not doing very well because of the capital rotation. I'm more focused towards energy and industrial. So I had other companies here as well, Caterpillar, and a long list. So on our system, for example, for this week's of analysis, let's go back here and let's keep it this way. We go to our watch list, and we have I maintain several watch lists. So this is one of the watch lists. This is my weekly weeks, but I don't want that. I want this one. Let's see if it is calculated. Okay, in this, we have 35 stocks. I need to update this and see its return. For example, SanDisk is right there. Its ER rating is still not available. Why? Because its ER is earning is not available for last 3 years. It's a comparatively new IPO. It started, I think, 2024 or 5. But its WR percentile is 99, top of the range. Why? We all know what it is doing. And so its performance is 99% better than all this other stocks in the universe. How advanced the TR indicator generates signal? TR indicator now, for example, when the first stage appears right here, then it will indicate the buy point, potential buy point, and the stop loss. Now, It's up to you whether you want to wait for the second or third stage to come or within 5%. If you want to take chances, you are aggressive in nature, you probably can take an early entry right here. But there are higher chances that, especially if it is coming out of a downtrend like this thing, that this first early entry will fail. Once a green zone is established, then the next time an early entry is established, the buy point will appear on TR indicator, and that's probably have a higher chances, much higher chances to give you a good return, depending upon the overall strength. For example, the Apple was last year, starting from February till May, April, or maybe June, was in a downward trend. So you could expect more failures of the buy point and the first stage of the TR indicator. But you see, it never made to the buy point. Once the green zone appears, strong green zone, then the first stage next time started becoming successful and successful. And every time when it appears, it gives you a very good entry, even in advance of that particular buy point. The green signals are the first stage of a potential uptrend, according to TR indicator. The buy point is right this line. So if you are making an entry here, you're taking some more higher risk, but obviously the return will be higher as well. So coming back to our watch list, I have sorted it down with a higher percentage rating up there. So for example, Teradyne, Fix is comfort system, is part of our weekly stock as well. Intel is somehow it has performed recently very well. So it's performed 90, better than 96% of the stocks. WR percentile is the percentile rating, and it means that it has performed better than 96% of the stock in this universe over a period of last 1 year. I think you probably just I explained it earlier. The definition. This is what is the WR rating and what is its percentage rating. So a score of 80 to 99 means a very strong price action during last 1 year, outperforming most of the market. And similarly, AR rating 80 to 99 means it is growing its earning, and the earning growth is better than 80% of other stocks. Okay. Now, for example, Caterpillar had a very good percentage rating of WR 96, very good performance action, 94. Its earning rating, however, was slightly lower, 33, meaning the earning growth rate for last 3 years was not that good, although it's not that bad as well. So we can take a look at that as well. Not only this, if I want to see a quick scan of how do they measure, I just need to change the view for the TR indicator to daily, weekly. And it will give us both on the daily side and the weekly side. For example, ExxonMobil right now, it has given us a very good signal. It's already in our weekly list. We picked it up 1 month ago, and since then it's 23% up. Asterisk means that it's showing strong relative strength and accumulation by Wall Street. Its WRPCT means last 1 year it has beaten 81% of stock when it comes to the price action, but its ER is just 28. So let's, for example, maybe we can take a look at ExxonMobil and see that why its ER is slightly lower. And this is, okay, give me a second. This is India. Let's go to stocks analysis and put Exxon here. And when we put Exxon here, here is the summary on your right side. This is TR strong status on daily chart. Weighted rank is rating is 81, as we saw that percentile rating. Score is 34, and earning rating was on the lower side, 28. And this is what we wanted to know, that why it's earning rating. So we need to go to the fundamental tab and ask it to bring the fundamentals of ExxonMobil. And the fundamentals are here. You see there are many reds here. It's not like Apple. So 3-year earning is even down, and last 4 quarterly earnings are also cutting down. That's why its earning score is lower. Quarterly revenue is also coming down because in last 2 quarters crude oil prices were lower. So So yes, we have financial sector as well. All the stocks in this 5,700, there are many financial companies, all banks, everything. Not everything, I would say, but all major stocks which are traded on New York Stock Exchange, they should be here. So, in other words, on the earning and the sales growth side, Exxon is not as good as many other companies. So, what is propelling stock? Because there's some recent news about the Venezuela and other oil that has the crude oil has established itself, and so does Exxon itself. It's now it's a new high. Now we have to uh, perform an analysis, not just on earning, but future potential as well, and see is how does its TR indicator looks like. It definitely is in a strong buy. As we saw that it says strong buy, and we have to take a look. But it looks a bit extended from its previous buy point, which was around 129. Is 150. Now we have two more strategies. Earlier, when it was here, right here, last month, so I gave a signal through my WhatsApp and social media group because it was during the week. Hey, Exxon is breaking out, and it's around in a green zone around this buy point. This is the time to buy. And as you can see, it went on from 129 to 150 approximately. It was less than even 129 at that time, 190.20. So 30% or 23% return in just 1 month. Not bad, I think. So that's how you combine your analysis with your weighted rank percentile rating or WR rating and earning rating. So for example, Walmart is a strong buy or on both weekly and daily, but it's not near a buy point. Otherwise, a check mark should have appeared like this WSM. Percentile rating of Walmart is price action has been very good, better than 78% of the stock during last 1 year, and its earning is also very good. So we can go and take a look at Walmart, and that will give us an idea that why is ER indicator is better than Exxon. Exxon has just 28. So update this Walmart page, and Walmart's weighted rank score is 28.6, while the rating is 78. So it has performed better than 78% of stocks during the last 1 year. And in order to get this fundamentals, press this thing. It will bring you the fundamental screen. So its earning growth has been 25.57% for last 3 years. Gross margin is 25%, return on equity is 23%, and there is a continuous increase in its sales revenue from $681 billion to $703 billion in just last 1 year. So these are the things that we need to take into account while evaluating it. But is it a buy right now? Maybe it's a bit extended. That's why it's saying a strong buy did not give us a check mark. It's our decision whether we want to go for it or we don't want to go for it. Mustafa, someone is asking that the restrictions on account in selling stocks only after 7 days. I don't know why there's a restriction. Maybe their total account is PDT, patterns day traders, and that kind of account, you have some restrictions that you cannot sell if before a certain period. So if you take a look at the weekly commentary and the stock picks and only focus on the long-term stocks with the good fundamentals, hopefully you can reduce your number of trades and fulfill the requirements of the pattern day traders. So another question: the buy point is above the buy point. Where it started going up. Why is that, please? I don't understand. The buy point is above the buy point. This is the buy point shown by this black line, and this is the green zone. This is not the buy point. This is the strong buy zone. We want to ideally, when this strong green zone starts and we are around this buy point, we want to buy around this buy point. If you are aggressive in nature, want an early entry, you can even try at the first stage of TR indicator, which is this triangle, the green triangle, but you have a higher chance of failure here. Obviously, you have a higher risk reward as well. Okay. Two rankings, WR and ER. WR is just based on the price action only. So how much the price has increased of the stock had nothing to do with the earnings. And earning has only is an indicator which is assessing how much the company is growing its earning, how better they are growing it with from the rest of the stocks or rest of the companies in those 5,700 stocks. So that's why they are two separate things. One is measuring kind of a relative strength, the price action strength. The other is measuring the strength in growing the earning, the fundamental side. And the better the earning means, which means that the better the ER score means the company is getting better at in growing its earning, growing its overall business on the fundamental side. Okay, so we have probably compared 2, 3 stock, Apple, Walmart, and others. But beside that, there were others as well. KLIC or TSM or Carnival. Let's take a look at those as well. If we have time, then we can take a look at UBS. Give me a minute here. Okay, so going back here, let's take a look at KLIC. That's an interesting stock. It's a mid-cap stock, rather a small stock, $2 billion worth only market cap. It's like Sendesk. See this TR indicator, what it says? This up arrow means that a strong zone has just started. Asterisk means it is on the TR indicator is showing a relative strength to other stocks as well as it is being bought by Wall Street, is being accumulated right here. So this it has just started around a buy zone and is being accumulated. Now, being a semiconductor, it carries more risk because the way it is growing, it can easily come down. So if you are an aggressive in nature, you can take a position here with a buy stop loss around 64 only. We don't recommend anything beyond 8 to 10%. But look at his past history. This is the buy zone initially, for example, last September, and it has given you some good reward here. What about this buy point? And this is strong. When you if you keep just and make an entry here, this is your first TR signal entry here, and it has increased from 43 to all the way right now to 69, almost 60-70% increase. You just hold on to this thing. All you need to make sure that you are not in a strong sell zone like this, because the buy point and the first stage are more likely to fail when you are in a sell or bearish trend of this here, like this area as well. Once it has come out of that, you have green zone, then you have a higher chance of a entry of a buy point in the first stage to be successful. That's how it's worked. But we want to take a look at his WR as well as that was KLIC earning rating as well. So let's update this thing. Many times green signal in the background, green comes still don't grow till we need to enter exit until we find the I'm not let me come back to this thing. So it's very poor when it comes to its earning rating. It's red, it's only one. In other words, the company is still not profitable. Although its price action is better than 90% of the stocks out there, which is strange. It means market is just pushing it on expectation that it will perform better in future. So you see the earning in fact have gone down. Last fundamental side is weak, although it increased the quarterly revenue. So there may be some news about the stock, maybe some other things. If you want to go and find more research on that, you can fetch news here, do an AI analysis right here, and it will bring 10 latest articles that why it's showing up, what is there, and has the bull case changed, and then you can do further research on this based on the latest earnings available. And you can also do an AI news sentiment analysis, analyze those news to see how much the market is bullish on this particular stock based on these news articles. So market is 80% confident that this stock will go up. These are the bullish factors, these are the bearish factors. And these are the key points of its reports. If you want to do a further deep technical analysis, so we can run an AI technical analysis of KLIC, and the AI agent will go into the depth of its technical indicators and explain. Again, the technical side, the AI indicator says is 85% confident that it will go up. So weak on the earning side, and the earning growth has also weakened. But since it's a small company, they are more volatile in nature, and overall market still see a lot of growth in this particular stock, which is strange. So it depends upon your risk appetite. If you are a risk taker, aggressive nature, you can go ahead and take a look at the company and buy it. So what is the question? Many times green signal and background green comes, still don't grow. Because this market, anything can change. Maybe a tweet from Trump can change easily the whole situation. Tomorrow there's going to be 50% tariff on some XYZ country, which is the core market of a KLIC. Then what do you think the stock market will do this? The stock market will definitely start dumping this particular stock. So what you need to do, you need to be more careful if you are in this strong sell zone. I would say never buy, because chances are higher that initial buy point and the first stage will fall apart and fail. Once you are out of this and in a green zone, the chances are higher that this initial stage, and if you are around a buy point, then it will go and give you a good high to reward to risk ratio. Right, no quick checkpoint, because there's a paid subscription to Zoya Musaffa. They charge for that service separately. So if I apply a Zoya or Musaffa check, then I probably will have to raise the prices because there will be an additional cost of checking it every time it checks. What we do before we put it in our weekly commentary, we run it through manually every stock and see if it meets our criteria, not necessarily Zoya or Musaffa criteria. Okay, coming back to our list, let's analyze another one. We have done this KLIC. Let's analyze Carnival, because it's not a technical, in a tech sector. It's more like towards discretionary sector. So let's analyze Carnival this time. Go back to the stock analysis, put Carnival here, and see what our systems update it says about Carnival. So Carnival again has a strong buy. Check mark means it has just it's around a buy point, and it has weighted rank rating of 25.7, which is better than 76% of stocks out there. So it's showing a strong price action, but its earning rating is still red, 14, not being able to improving over the last, because it's a highly cyclical business and they're not consistent growers. So you see the earning growth against last year was minus 78%. So that's why the earning rating was not very good. Although the growth is still for the last 3 years on a combined basis was 17.86%. But it has been able to increase its revenue. So hopefully the earning situation will get better. We have to take a complete holistic approach towards analyzing a stock. Its earning might be better, its revenue might be better, or maybe it has a hot product which market yet to realize and reward the company accordingly. Max 7, I have already analyzed Apple, but right now Max 7 are not in, I would say, not hot, and they is moving away in general from Max 7 to other stocks, industrial sector, or like in healthcare and some financial materials. Let's analyze Google. I want to show you on the Google, Microsoft. It's another Max 7. So Microsoft has come, obviously it's a broken chart below all key moving averages. Strong sell zone. Now what does this mean? And the weighted rank rating is minus 94 is the raw score, 37. So it's only performed 37% better than 37% of other stock. Earning rating is, however, is good because it's still growing its earning. So it's a long-term stock again. Coming to this TR indicator, I want to show you this thing. So you have to decide, are you a short-term trader on the Microsoft or a long-term? If you are want to buy a Microsoft stock, don't expect it to immediately go and give you good return in next maybe 6 months. Or this is the TR indicator chart. Last time it reached this buy point, it failed. After that, it has never been able to reach the buy point. Every time it encounters a change in the trend, first stage indicator, it fails. As long as it remains in this orange or green strong sell zone, you can expect Microsoft that it will be difficult for it to come and start immediately giving you this kind of a rise. If you want to expect this thing, that's why you need to wait for this strong zone around a buy point. Once it is here, it has crossed this thing. That means that momentum is behind the stock. As long as it is there, and it was there for 3 or 4 months, and it gives you good return from 400 to 500, 20% return. But once was out of this momentum range and a strong sell zone, it's not a good idea to go into the Microsoft. Now, NVIDIA is about today's weekly commentary, which is coming out very soon, is again on a buy point. And let's do this analysis of NVIDIA. Someone are asking about NVIDIA, so I just okay. I said let's analyze NVIDIA. NVIDIA is still in a strong sell zone, trying to come out of the range. Its weighted rank rating is good. Performance action for last 1 year was 80%. 80% better than 80% stock. And its earning is also very good, 75. So fundamentally, the stock is very good. That is why whenever NVIDIA is falling and it is coming to the lower side of the range, it finds support. Because fundamentally, there are investors out there who believe in this, and they always when it comes, so a good point to buy NVIDIA is around this support. It's still in a sell zone. So ideally, there is not a buy point and buy signal according to our system unless this green zone appears. But NVIDIA for last 4 or 5 months, in fact, from July is in this range. It has to come out of this range, something around 212 or 200. Then we can say NVIDIA has formed a base and now it's ready to move up just like here. Okay. BE, I know BE is a volatile. It's not an easy stock because its trading range is too high. I can evaluate BE as neutral. You see, its trading range is too high. In one day, it goes from 168 to 136, $36. Now, would you like to be in that kind of volatile stock? I would say no, because most of the people which I know, they are not that kind of a sticker. They want to be in good volatile strong stock, which moves slow. On the average, what do you consider a good return for a period of 12 months? Just asking on the average based on your experience. If you are beating market return was some SPY was something around 12 or 13% for last 1 year. Then it's a good return. If you are not being able to beat the market return, and then it's not a good stock. You can analyze any stock, Arshad. We can go on and on because thousands of stock, and because of the time constraints, I cannot. But Alta, let's do that. I have received a request for Alta. MU, I can tell you the MU's weighted rank rating should be around 99. You want to have a check? It's 89 for Alta Beauty, MU, and earning ratings is not that good. It's 33. Look at that, 98%. MU has beaten 98% of stocks during last 1 year when it comes to price action, 283.1, and its earning rating is 93. Both extremely good. But is it at a good buy point right now? No, it's not. It's still in a neutral stage, always on the higher side. What should we do with a stock like MU? We should buy it something around whenever it comes to its 50-day, or in this case, maybe 20-day buy line. This is where it is expected to find support because there are many people like you and me who are, and many traders who are waiting for it to come down, and they will jump onto any opportunity when it comes down. You see this growth rate, earnings, last 3 years, cumulative growth rate is 24%. Year to year is 1000% approximately. This is exactly what the stock is doing. Sales growth is 45% year to year basis. Quarter to quarter is 13.2%. Blowout earnings, and not only the blowout earning, it has good raised rise guidance as well. And because of that expected guidance, it's performing well on every corner, except that is slightly extended at this. This has already covered a lot of distance. From in August, it was 100, right now it's 450, 350% return. Now it's time maybe to pull down, form some base, but every time it comes to this area or this area, it will find support, and that will be probably to make an entry here. Okay. That's actually we can check UBS as well. Why not? And any stock can be analyzed, and we can take a look at their WR rating and the ER rating. UBS at this time, what is UBS? It operates through four divisions: global wealth management, personal and corporate banking, asset management, and investment bank. It's in a strong sell zone. Why is it a strong sell zone? It has fallen apart from maybe around 50 or 48 to less than 40 right now. It's approximately 20% drop. That's why if you go to your ADS, it will show you it's in a strong sell zone right here. Okay, can it turn backward? Definitely it can turn backward. Nobody knows for sure, but definitely depends on a lot of factor. But to me, I would, if I'm looking for something to enter here, I will looking for something like this, buy point around this green zone. That will be a better place to aim for an entry in UBS. Coming back to our, someone is asking about what are the charges in this. So if you go back to our website, which is this analyzestocks.net, on the front page, there are three type of plan. One is just for weekly commentary and stock picks. So every week, we is $9.99 a month. We share weekly commentary and stock picks, and it's right here in the weekly commentary. This is our latest weekly commentary available today, and I can show it to you if you just download it. It starts from what is happening in the market, analysis, why we turned bearish December, what happened to cryptocurrency, overall market scorecard, different sectors, and then it comes to upcoming economic events, a strong important our picks and our in the in which we already have. For example, NVDA, we are saying that if it is crosses 196 or it comes down, it will be a buy zone. Apple, as we explore, it is still in a buy zone. So we highlight those things with a kind of a bold statement here. Google, on the other hand, is not in a buy zone. It's cooling down. Maybe it's a time for it to consolidate, and then it will pick up something. For the week, we have two new picks. We just analyzed VLO Energy and KLIC. KLIC is kind of aggressive. Remember, I said it's extended, it's aggressive. So if you can bear that kind of movement, then it has already gained 23.7% last week, KLIC. Similarly, we have other stock which we picked previously. Some of them we position we close, and for each of them we mentioned that whether it's in a buy range or not, it's a good point or not, it's aggressive entry or not. And we say it seems to be unstoppable. Maybe we have missed the buy point, but it's not a good idea to chase it, and not a good idea to find. Fix is another very good pick of us, which we picked 4 or 5 months ago, and it probably have given something around 30-40% return. MU is there. So that's how the system works. Our weekly commentary and um, our the weekly commentary and stock picks and the complete system itself. Let's go to the Okay. Analyze stocks. There were more questions on this, and so I'm explaining this thing. If you want to get the full system, which is a web-based advanced document system, TR signal, there are many other pattern detection as well, which I haven't gone through in this because I will just focus on the two new scores, which were WR and ER scores, weighted rank rating and earning rating. We have several stock screens, AI report, which I just show you, the new sentiment analysis and technical analysis, AI confidence scores. You can maintain your own watch list, seasonality analysis, and there are a lot more to offer here. Then you can, for $25 per month, monthly subscription, if you want to buy for the annual one, then the annual one gives you a free $140 worth of Excel based system. The same system earlier developed in the Microsoft Excel, which is right here. And many users still use this system. AI part is not there. In the new, like this is an analysis of Ethereum. So Ethereum, you can see that 1 year is minus 34%. Strong sell zone. We should not be aiming for any entry in Ethereum at this moment. When you question is about how can you explain how to set a stop loss. In general, our recommendation, if you are using this system, you can go to the TR indicator, and for every buy point, there is always be a level mentioned as stop loss. Now, the maximum loss which we recommend is 8 to 10%, regardless. Unless you have a strong conviction, like something like NVDA and or Apple, that it has a history of coming back or making it a comeback. So then you can probably give it more room beyond 8 to 10%, maybe 12%, 15%, but not in any case more than 12 to 15%. So our recommendation is 8 to 12% stop loss. That's how you set it. Okay. Any other question about this? So this is our system. I would like you definitely, if you don't not subscribe to at least weekly community stock pick, there's a wealth of information there, and every week we analyze hundreds of stock and put those our finds in the weekly stocks, weekly commentary stock picks. And if you want to do it yourself, to understand the technical side of it, I think the TR system, there is some other very good indicator charts which gives you buy and sell signals. And those indicators, for example, this combo strategy or maybe cloud strategy. And let's take a look again at Apple. What is this Ichimoku cloud strategy says about this particular stock? And here you have these buy signals. So Apple has received a new buy signal just right now. That's why Apple is in our buy zone on this strategy as well. This green diamond is a buy signal, and this red diamond is a stop loss or sell signal. Any further question, I will be happy to answer. If you want to ask me here, I can. If we have time, we can answer it here. Otherwise, I'll be happy if you can just ping me a message, send me a direct message, and I will be happy to answer there. I hope you like the presentation, you like the product, and if you do like it, please subscribe to our services through the weekly commentary or the weekly system, which is right here. The whole system, which is AI powered web based, $25 per month, and it gives you 10% discount if you subscribe on annual basis. So it will $275 one time charge for the whole year. The Excel based system is separate. Okay, thank you very much. I appreciate time. I think I have one more question here. No, everything has been answered. Take a look. I can definitely evaluate, analyze other stocks as you on your request. So thank you very much. Second opinion, do we need Excel? No, you don't. But it comes free of cost with this annual package. So you don't need Excel software separately because everything has been built in this web-based system. AI has several new features which are not available on Excel. But if you are in kind of an a number junkie person like me or an engineer who likes to work on a spreadsheet all the time, then Excel system is for you as well. You can maintain your watch list here, right here, and you can analyze it. You can maintain your, you can see the signals, the TR signals. There's a daily trading guide is available as well as heat map and seasonality factors as well. Okay, so in reality, you don't need it, but if you like to work with numbers and crunch numbers in a worksheet, then it's for you as well. Thank you very much, and have a nice day. Enjoy your weekend. One final question: do we have training of AI available? Training of AI available? We have a separate FAQ sessions here and videos on our YouTube section as well. An FAQ give you an insight and details about these tools and the AI system as well, AI technical analysis and what it is all about and how to use it. Okay, thank you very much. Bye bye.